Hello, Jim here. I've been trading options for a number of years. I earn around 8 or 9 thousand on a monthly basis just in options premium. I started very slowly. I started first with covered calls, then moved into cash secured puts. I started in one account, then moved to multiple accounts. I even started with one contract and then moved into more than one contract. I typically don't do more than, say, four contracts, but it worked out really well for me. Today, I want to share with you what I did, how I use these five strategies, and how they're able to bring in so much money on a monthly basis. So stay tuned. I think it's going to be well worth your while. Okay, now a bit of clarification about my 8 to 9 thousand on a monthly basis. I didn't start there. I started at 1,000 a month 4 years ago. I wanted to learn the right way to trade options. So my first goal was 1,000. Then I increased it to 15,000, 15, not 15,000, 1,500, then 2,000, and so on till about a year ago. I decided, let me see if I can do 8,000 a month. And I actually went too high, so I backed it down to 7,500. And just this past January, did I set the goal of 8,000, and I've been able to achieve that since January. So the point being, I didn't start at 8 or 9 thousand. It's been a journey to learn the right way to do it. I also started with one account. It was in my brokerage 21. I got burned tax wise, so I decided, how can I avoid all these taxes? So I started doing more of my put trading in my retirement account, my IRA, and that worked out fairly well. So I was doing mostly calls in my brokerage and mostly puts in my retirement account. Then I decided, well, I want to move to other accounts and try different accounts. So I learned I could also trade in my Roth. And then at that time, I learned that I can earn better interest at Fidelity, especially with the rate increases. So I decided to move my retirement accounts to Fidelity, also because my 401k was currently there, and I moved it out of my 401k into a Fidelity IRA, and then moved all my IRAs from Schwab into that same account. So now I currently do all my put related trading, or up until recently, I am doing a little bit of put trading in my Schwab account, but I moved that over to Fidelity. So my retirement accounts are at Fidelity. My Schwab accounts are my taxable. Um, and for probably the last 2 years, I did almost all my, or last year, actually, I moved them a little bit over a year ago. I think it was January, February of last year that I've done all my retirement trading and most of my puts in my Fidelity accounts. And that's worked out really well. And now I'm also doing some puts in my Schwab accounts, primarily my wheel trades, just so I could start making a little bit more income in those. So the point being, I didn't start in all my accounts. I started with one account, and that's what I recommend to most of my members. Start with one account and then, grow to other accounts. I also started with one contract, then increased it, but I'm still doing no more than four contracts, and that's primarily with inexpensive stocks. For instance, I did a trade today with SoFi with a spread of 12 and 8, and I did four contracts. Now, I'm not doing that with expensive stocks like Amazon or Google or Apple. I'm doing it with fairly inexpensive stocks. Um, and that's also what I recommend to my membership. Don't, you know, some of these YouTubers or other people who are teaching how to trade options, they suggest do 10, 12, 15, 20. And I've actually had members who joined recently because they got themselves in big trouble doing way too many contracts. So start slow, do a few contracts, and then as you get more comfortable with it, then you could potentially do more. Um, and then I moved to, on a quarterly basis, I decided to try a new strategy each quarter. So at that point, I moved into vertical put credit spreads. This was probably early in 21, maybe actually early in 22. So I started learning how to do vertical put credit spreads. I also learned about the Greeks, what the delta meant, what theta meant. And those are the primary two I like to use. I started out with 20 deltas for covered calls and 20 deltas for um, cash secured puts or vertical put credit spreads. I quickly learned in 22 when we went through the market crash that a 20 delta, 20, 25 delta was too risky. So I lowered it to around a 15 delta, meaning if there were two strikes, one was a 14 delta and one was a 17 delta, I usually would pick the 17 delta. But I would try to stay as close to that 15 delta. And that made a big difference. Since I've done that, I've had very few positions assigned to me, especially, this correction we're currently going through, or have gone through since I believe the end of February. And then, once I learned about vertical put credit spreads, I realized, buying that long put could really protect you on the downside. Plus, it would gain value if I really wanted to own the stock and I had sold a cash secured put at a price I want to own it, then that long put becomes worth a lot. And I can use that, the proceeds of selling that to lower my cost basis for owning that stock. Because again, I describe myself as a investor slash trader. So my first goal is investing, and then I trade to add more icing to the cake. And that's worked out really well. So let's kind of regurgitate what I just mentioned. So I started with covered calls, then I went to cash secured puts, then vertical put credit spreads. And I did those for a long time. So then the next quarter, I decided, well, let me try iron condors. There's been a lot of talk about iron condors. And I have a lot of stocks that don't move much. And I have a lot of ETFs that don't move much. So I did some iron condors on IWM and XLE, and they worked out really well. Even to this day, I haven't had any ETFs be assigned to me. So they are definitely safer. The main reason being is you don't deal with earnings. Earnings can have a major impact, as we've seen recently. If a company misses earnings, they will get hit hard. They may go down 15, 20% in one day. And the opposite can happen if they have good earnings. So not having earnings does make a big difference. And then I decided to try the option wheel strategy. I tried, in some cases, there's stocks that I do want to own, but they're maybe not my favorite stocks. So I'm okay to have them called away from me. So I decided to try the option wheel, and that worked out really well. So recently I've set up a couple of strategies on how I do that, and I'll share that in the next part of the video. Now, I do the option wheel strategy a little bit different. I decided for my membership, I had a lot of people joining that were brand new to trading. They had very small accounts. So I decided to set up kind of strategies within strategies. So I set up what I call my conservative 10K strategy. So if you have a small account, you could do these particular trades in this type of account using, this type of wheel strategy. Then I did what I call my balance. So for a larger account, if you have a $25,000, $30,000 account, these are trades that you could particularly do in those kind of that kind of an account. You could, it doesn't mean you can't do that in the other types that I'm sharing or talking about. You could also do it in some of those, but some of these were more unique and maybe a little bit pricier. So that was the second one, my balanced 25K wheel strategy. And then I had what I called my advanced spread strategy. So I would combine not just, running the wheel, but also doing it with vertical put credit spreads versus just cash secured puts. So that again, when you purchase that long put and the stock drops, you could also sell that put, especially if you can buy it for really cheap. That will bring in even more premium. Now, you could also do that on the call side. That's not a piece I've done yet. Actually, I've been really surprised how few of the positions have been assigned away from me or to me. I've had a few. I think I've had AMD, PayPal, and I believe Pinterest. So by running the spread or spreads along with the wheel strategy, you can potentially do a little bit better, but it is a little bit riskier because you're dealing with higher price stocks. So I set up these three strategies, and I have a lot of members following them and trying the different strategies. Like I said before, though, you could potentially take one of the trades I did in my conservative strategy and also do it in the more advanced strategy. To give you another example, I did yesterday one in that account, which was with American Airlines, and I did an even thinner spread. I did 1150 and 1050, and the 1050 was so cheap that I ended up bringing in quite a bit of good premium with it. and I did 4 contracts. I think I brought in over $200 on those 4 contracts. You could also do that in one of the other types of strategies. So any of my wheel trades, people can, can do in their accounts. It all depends. And this is what I encourage people to do, is to look at the company. Do you, even though you're going to be running the wheel and maybe, giving up the shares, still pick good companies, still pick good quality companies. I look at the fundamentals, so ROE, ROI. Also look at debt to equity. I look at, year over year earnings, cash flow. Are they buying back shares? Do they pay a dividend? Do they have a low payout ratio? I still look at all those things, even with running the wheel trades. Um, and that, I believe, really makes you a better, more successful trader. And then also, you have times that where a stock will shoot through the roof, and maybe you already own those shares. And when that happens, it is difficult to sell covered calls. And maybe you change your mind because that stock is done so well that you want to keep it. So just a few of the things I wanted to talk about with these strategies. If you want to learn more about my strategies, in the description will be a link to my Patreon page. You can learn about the different, my 3 levels of membership. I actually have 4 levels now. I have a 200 a month, which is provides a weekly meeting, 30 minutes long, and it's a little bit more involved. I only have 2 of those sessions, mainly because I'm still working. And then I have 3 other levels. I have the coaching level, the traders club level, and then the investor level. Um, they're all month to month. It doesn't require a meeting with me to join it. The investor club is free for the first week, so you could try it, see if you like it. Now, I may do away with that, and I may be increasing prices on May 1st. I know for the coaching side, I probably will, but for the others, I'm not quite sure. So take a look. It may be worth your while, and especially if the prices are going up in the next month or two. So I also wanted to share a lot of the other strategies. I do have a lot of members in my membership, especially on the Discord, who are trading like zero DTEs. They're also trading futures and different type of indexes, and it's gotten a little bit more complex. Now, if you're a new member in my membership, I typically encourage them to ask questions, paper trade before you try anything that's, what you're not used to or something that's new for you. Um, and to interact with the members. I've been really happy with how members will answer each other's questions, and that they will provide a lot of help, especially if I'm busy and I don't have time to answer a question. I typically do get to all the questions, but at times it might take me a little bit longer. So next, I want to talk about all the different strategies. I've come up with a list of strategies, and I also have a small demo I wanted to do, how I, look at a trade and I set it up, how I start with a cash secured put, and in a lot of cases end up with a vertical put credit spread. So stay tuned. I think it's going to be well worth your while. Now, before I jump into what the trade setup looks like, I did want to mention I'm setting up a spreadsheet that shows all the different types of strategies and kind of how to look at them both from market outlook, structure type, risk level, if they're income focused or beginner focused. So here you can see some of the different strategies, and my goal here is to get them all listed at some point. But you can see the ones in green are the ones I'm currently doing. They're probably the true beginner type strategies, and then the other 2 that are blue that I show here, the ones that I'm also doing that are a little bit more complex. They're a little bit more intermediate than true beginner. So here you can see covered the cash secured puts are probably the easiest, safest. Probably if you've never traded before, it's a great way to get started to learn the cash secured put, then the covered call, then the credit spread, kind of like I talked about in my earlier part of the video. Then next, I did this reverse jade lizard, which is very similar to an iron condor. I almost did those about the same time, but I just like the ability that you could sell a call, then a short put spread. And pretty much every one of the trades I did that were a reverse jade lizard worked out quite well. Now, there are a lot of people that talk about the jade lizard is also another one that is a fairly good one to do. I haven't done it. I do plan to maybe do it in the next quarter. And then finally, iron condor, which is my favorite. Now you also have iron butterfly, straddle, strangle, a short strangle, jade lizard. I also like to do poor man's covered call. I've done a few of those. When the market hits bottom is a really good time to do a poor man's covered call. So these are just to name a few, and then I'll share these with my memberships as a spreadsheet, especially when I upload this latest video that I'm doing today. Um, and then as I improve upon it, add more and more. I might even do it in the planning worksheet as another tab. So just wanted to share this with you too. And next we're going to jump into um, what the setup looks like for a cash secured put that ends up becoming a vertical put credit spread. Now here's American Airlines. I've selected it. This is within the Schwab's trader page. So typically what I like to do is first do sell to open. I'm going to do one contract. I always start with one contract. I add more depending on how risky I think the trade is. Now, I did this trade yesterday. I did it with American Airlines. I believe I did it with 411, and I set it up at the time is I think 1150, and then yeah, that's about right. 60, 61. They're down a little bit more today, so it's currently in the money for me, but you can see one contract at 1150. So you need 1150 to make, or 1150. You multiply 1150 by 100 to in order to earn $60 for this cash secured put. So what I'm saying here is I'm willing to sell this cash secured put at 1150. So someone, if they're willing to, you know, pay me $60 for the opportunity to sell me these shares, which to me is kind of crazy. The fact that someone will pay you money to sell you shares. Now, since it's fairly inexpensive and it moves in a fairly small range, you can see $9 to 19. I believe in the last 6 months it's stayed between, 10 and 13. So, and this is where I typically will add another leg and then I'll say, well, what does it look like if I say buy to open? So you're buying to open a long put. I want protection. So I also will do it lower than this 1150. So, and the reason it blanked everything out because it's currently showing as 1150. So if I do 11, I can see what it looks like. So it's saying it'll pay, I can still pick up close to $25 for a $50 spread. So that's pretty amazing. So here I'll go down a little bit lower, 41, and I think I was at 60 before. So let's go down to 1050. Well, that's the same one. Let's go down to 950. So that's similar to what I did. That's a $2 spread. So you're putting at risk $200 to pick up 54. And again, a lot of times I will pick the 57 and see if I can get assigned closer to 57. So I may do 56 here. So, and that's for one contract. So I can make $54 putting $200 at risk. But if it gets assigned, it will be the full short. So I'll need 1,150 minus whatever I bring in. So it'd be right around $1,100. But then if that happens, this becomes worth more. So I could sell the long put. So say American Airlines drops to $9, this 950 will become a lot more. I could sell it and then put that towards the cost. So the original cost would be 1150, but say I could sell the 950 put for $1, then my cost basis would be 1050. So as that long put gains value, it allows you to open up the position at a lower price point, which, then when you sell a covered call, it gives you a little bit more room to sell a covered call that can also be fairly profitable. So what I did then is, well, I have 4,000 cash available, so I put this up to 4,000. So it's only charging me to buy this $5 to $6 per contract. Now I could go a little lower. I could see, well, what does $9 show? It only went down $1, so I don't know that that's worth it. So I'd go back up to 950. I might go up to 10 just to see out of curiosity. And that's also not bad. That's $1.50 spread to make 216 for four contracts. then I would review the order. And I always take my time after you click on the review order. And it also works like this with all brokerages. Just be sure you have everything correct. Be sure you're getting a credit where it shows a credit here. I've made the mistake myself where I've done the trade too quickly and it's a debit and I end up with a debit. If you do that and you put the trade in the wrong way, then just re-enter it, reverse it. So close the current position, um, and typically it's within a couple of dollars. You might actually profit a little bit from it if the market's moving fairly quickly, but you can, by reversing the trade, you can get out of it with just a small amount that you would end up paying, or you might get a small amount back. You might make a couple bucks. Now we can also, while we're here, we could say, well, let me see what the calls look like. So here an 1150 call is between 31 and 32. It's currently 1118. So I can look here at 11 and again, it's $55, $56. So it's very similar. And in this case, I would want to go higher. So let's look at a 13. So again, I'm bringing in 15 or $52 on a call. So if it gets assigned to me, and that would be the perfect situation, it gets assigned to me quickly, then I turn around and I sell a call spread on it and again pick up another $208. I am using 4 contracts and this is again a $2 spread. We could look to see, well, what is it? It's actually really close with a $1.50 spread. So you can really see how this can work out. Now, do I want to own American Airlines? Its numbers look good, but not great. It's not necessarily a company that I want to own. It does have a lot of debt, which is typical for the airlines, but for running the wheel on, I'm perfectly fine with running the wheel on it. So as always, thanks for joining me today. Let me know what questions you have. Do you agree with this kind of a trade, or what kind of strategies are your favorite strategies? And as always, thanks for joining me, and I look forward to seeing you next time.